this session is it will be a two-session program. The first one, we will touch upon all the basic guidelines with regard to retail lending policy, and then we will move towards our second.
Yeah, I think
Yeah,
your mic got muted.
okay. Yeah, now it is clear. Na? Okay,
Yeah.
okay. So today we are going to start with the retail lending policy related questions. Then tomorrow we will be touching upon the products. So before we go into the deep of the session, with regard to the question pattern, I would like to just give some introduction. That is, as far as the promotion exam is concerned, you are not required to by heart some of the things. Okay, with especially with regard to retail lending. The first thing is that you need not remember any report numbers with regard to retail lending. You need not by heart the rate of interest, the sanctioning authority at large. But still, there are some guidelines which you are required to mug up the sanctioning authority. That I will touch upon definitely. But on and all, you are not required to by heart all this. So with that one, I am starting the session with the PPT. I think everyone is able to see my screen, right?
Yeah.
Okay, okay. So coming towards retail lending, uh, the basic products with regard to retail lending, as you all know, is like housing loan, vehicle loan, Canara budget, or Canara mortgage, all those things. So it is like with regard to retail lending, the basic concept is that all the processing starts with the inward of applications. Okay. So as you all know, we have defined inward tools with regard to every retail lending or every product for that matter. So in the case of retail lending, the all the inward proposals have to be inwarded in NB 179. So recently, what happened is that bank has come up with a computerized or digitized version of this one, NB 179, which is that they have enabled it in this one, Can BI. So you are not required to by heart that report number and all, but the basic thing is that all the retail lending proposals are to be inverted to NB 179. I think some 3-4 years back, this question was asked in 1 to 2. It was with regard to agree. So you are required to remember the inward registers for all the advanced related things. Now, coming to embargo. What do we mean by embargo? Embargo means the restriction put forward by the bank on such branches where the NPA percentage is high. So what is that NPA percentage? Bank has already defined the NPA percentage beyond which branches cannot sanction or beyond which branches cannot process the retail lending proposals. So that particular percentage you need to by heart. That is 5% under any retail lending scheme. So if you're, suppose if in your branch, if in your branch, the retail lending, say, NPA percentage is say 5% for Canara budget, you cannot sanction Canara budget in your branch. Except there is one exception in that. that is in the case of special packages like what we have permitted for Narayana group of institutions, HEFA and all, those things embargo is not applicable. But in general, if you ask me, the guideline is 5% NPA under any retail lending scheme. You cannot sanction the loan and it has to be referred to the next higher authority. Now, coming to next topic on this one, that is the restructured, rescheduled risk weight. What do you mean by risk rate? So risk rate is essentially our bank is required to keep a particular percentage of capital for every advances. Okay. So in the case of retail lending, the risk weight is uniformly 75%. So what does that 75% means? That is, suppose if the bank has sanctioned a loan of say 1 lakh, so the capital that the bank has to keep aside for that 1 lakh of retail lending loan is 75,000. So that is the concept of risk weight. That is the risk weighted assets. Now, suppose if a housing loan is rescheduled or restructured, in that case, we have to like put additional capital of risk weight of 25% apart from the 75%. So that's why we are very reluctant to go for restructuring. But so what is the problem in going for restructuring? That is, we need to place additional capital in towards risk weight. So the question here is that restructured or rescheduled housing loans will attract additional risk weight of 25% over and above the normal risk weight of 75%. So that is one important aspect and question here you can expect. Now, loan to value ratio. This is another important aspect with regard to retail lending, especially in the case of housing loan. Now, housing loan, what is the risk weight and the standard asset provisioning that is applicable? We will see it one by one. So, housing loan up to 30 lakhs. What is the margin that we are required to keep? That is 10%. So, up to 30 lakhs, the LTV ratio is, it can be, LTV is what? Loan to value ratio. That is, say, what is the concept of loan to value? That I will just check. I will just tell. That is, in the case of housing loan, suppose we have a property of say 35 lakhs or we have an asset of 35 lakhs. There is a restriction put forward by RBI with regard to the maximum loan that can be provided against the value of that loan. That is meant by loan to value ratio. So that depends upon the loan amount in terms of housing loan. Now coming to housing loan up to 30 lakhs, suppose if you are the minimum margin that we are required to keep is 10%. That means the LTV can go up to 90%. Okay. So if it is between 90% and 80%, bank is required to keep a risk weight of 50% for housing loan. And if it is the loan to value ratio is less than 80 or equal to 80, the risk weight is 35%. So higher the margin, lower the risk weight. That is the concept here. So as I told earlier, if that particular housing loan is restructured, it will attract additional risk weight of 25%. And the provisioning, standard asset provisioning will be uniform across all the categories, that is 0.25%. That provisioning and all, we will be having a separate class. It is a vast topic, so I am not going that deep into that. Now coming to LTV of loans, 30 lakhs to 75 lakhs. The LTV is, we all know that loan amount, the margin required for 30 lakhs to 75 lakhs is 20%. So the LTV ratio can go up to 80. In that case, the risk weight is 30%. Okay. Now for above 75 lakhs loan, the margin requirement is 25%. So if the LTV is 75 or below, the risk weight is 50%. So LTV ratio is directly linked to what? The margin. So up to 30 lakhs, there can be two scenarios. That is, if it is up to 90%, the risk weight is more because we are lending more against that particular property. Suppose if you are lending less, that is up to 80% the value, the risk weight will be 35%. So we are required to keep less amount of risk weight. Similarly, for 30 to 75, the margin is 20. So you can just remember by heart like this one. So 30 to 75, the margin is 20%. That means the LTV will be 80 and the risk weight will be 35. Above 75, the required minimum margin is 25. That means LTV can go up to 75. In that case, the risk weight is 50. So I think this is clear for all. Now coming to the next one. This is one of the most important topic with regard to retail lending. Last year, there was a question asked in 3 to 4 with regard to this particular one. And I think 2 to 3 also, there was a question. That is, what was in the case of CRG1, what is the score range that is required to be obtained by the borrower? We all know now we are the sanctioning and rate of interest is linked to Canara retail grade. That is this CRG rating model. Based on CRG rating model only we are doing it. So what is the latest guideline on CRG rating model? So if there are actually 5 bands in the case of CRG, the first one starts with the CRG prime. That is, if the applicant scores more than 95 marks, he will be rated as CRG prime and he will get the best rate of interest. Now, coming to CRG1, what is the score band? It should be 80 to 95, up to 95 in CRG1. 70 to 80, it will be CRG2, and 60 to 70, it will be CRG3, and less than 60, he will be rated as CRG4. So, what you have to study here is you have to by heart the score. That is, if the applicant is borrower is rated as CRG2, what is the score band? And the risk gradation, what is the applicable risk gradation, that also you need to by heart. So CRG prime is more than 95, CRG1 is 80 to 95, CRG2 is 70 to 80, CRG3 is 60 to 70, and CRG4 is less than 60. So accordingly, the risk gradation is also there. That is LR1, LR2, normal, medium, and high risk. Now, there is a mapping towards credit risk gradation also. That is CS1, CS2, CS3, CS4. That also you need to by heart. That is, in the case of CRG prime and CRG1, the risk gradation, CIC risk gradation is CS1. And other things are very easy because it is 1, 2, 3, 4. CS2 means CRG2, CS3 is CRG3, CS4 is CRG4. Okay. So that part is clear. So you need to by heart this also. Now coming to which are the cases in which CRG rating is not applicable. So this is very important because in this one, as you can see, there are 2 schemes that has been newly launched, which are these Canara rooftop solar, that is up to 3 kilowatt and 3 to 10 kilowatt. So in those 2 cases, we need not apply CRG rating also. Okay. That is, apart from Canara rooftop solar, what are the other products for which CRG rating is not applicable? That is Canara pension, education loan, gold loan, Canara vehicle loan to firms and companies, and Canara rooftop solar, both cases. That is up to 3 kilowatt and 3 to 10 kilowatt. This is very, very important question with regard from an exam point of view because many years there has been a question asked from this particular topic. So you need to by heart which are all products CRG rating is not applicable. Okay. So I think this part is also very clear. Now, coming to cooling period and sacrifice amount. See, this is another important topic because why? Because this particular guideline is also launched in this particular year, 2024. That is the latest guidelines is with regard is applicable from January 2024. So this also you can expect a question from this particular topic. What is cooling period and sacrifice amount? That I will just first tell. See, earlier in our bank, there was no guideline with regard to lending to this one persons with the settled and return of cases. So bank has come up with a guideline, clear-cut guideline that okay, in the case of borrowers who are having settled or return of history, the bank has put in place a new guideline within which we can lend. So what is that guideline? Suppose a party has come for a housing loan. If at all there is a settlement in his name, we need to see what is the age of the settlement. That is, since what is the time period or the when was the loan settled. With regard to that particular aspect only, we can lend to that particular customer. Okay. Now coming to the most important point with regard to cooling period and sacrifice amount. So what is the cooling period? Suppose the sacrifice amount, the cooling period is based on the sacrifice amount that he has paid or that the other bank has undergone with regard to that settlement or return off. If the sacrifice amount is out up to 10%, that is, suppose a customer has been sanctioned with 1 lakh rupees in other bank, or he had an outstanding of say 1 lakh with the SBI, and he has a return of say 9,000 rupees. Okay, in that case, the sacrifice is what less than 10%. So we can lend to him after 24 months only. So the minimum cooling period that is applicable in his case is 24 months. That is, after 24 months only we can lend to that particular. So it is based on the sacrifice amount or the percentage of outstanding in the case of other banks. Suppose if it is with our bank, it is directly linked to not outstanding, it is linked to book liability. So suppose a customer is having a return off of say 9,000 against an outstanding of 1 lakh. It is his sacrifice amount is up to 10%. So we can lend him after 24 months. Similarly, if the sacrifice amount is above 10% up to 25%, we need to wait till 36 months before lending him any further loan. That is what is the concept. Suppose if the outstanding of that particular customer with the SBI was say 1 lakh and the sacrifice amount that he has undergone in that particular bank was say 20,000. In that case, we need to wait till 36 months. Then only we can lend. So the next point is, what if the sacrifice amount is more than 25% of outstanding? Then we need to apply a minimum cooling period of 5 years. So this is from an exam point of view, this is most important because this guideline has been enforced from this year onwards. So there is average possibility that you can expect a question from this topic. Okay. Now, with regard to credit accounts where credit card receivables with the write off amount up to 10,000 reported as non-willful deposit may be ignored after a cooling period of 24 months. The above point that I have mentioned now, it is with regard to loans and advances. Now, suppose if the customer is having a credit card default of say up to 10,000, then the cooling period applicable is 24 months. So this is also very important from an examination point of view. So I think this point is also clear. Now comes another important topic of with regard to retail loans, that is the TAT. This TAT is very important. Why? Because the top management nowadays is very particular about TAT, and last year from 2023 onwards, we have introduced the TAT tracker portal and all. So top management is giving utmost important with regard to TAT. So you need to by heart the bank approved TAT with regard to each product and at various sanctioning authorities. Okay. So you just can go through this one. That is housing loan up to 25 lakhs. If it is at sanction is at a branch or RH, it is up 21 days is the TAT. Now, when we talk about TAT, uh, what is the guideline or from what date this TAT is applicable? That also we need to check. So it is not that 21 days starts from the day from which the RH proposal is at RH or the proposal is at branch. It is from the day in which you have took the application from the customer. So that is one important topic, I mean, point with regard to the applicability of TAT days. It is not that the day when we start or send the application to RH. No, the TAT doesn't start from that particular day. The TAT starts from the day in which you have inverted the application. So after inverting the application, you need to go for LSR valuation and then submission of proposal to RH. Everything has to be done within 21 days if it is a housing loan of up to 25 lakhs. And if it is a sanction by circle office, the TAT is 30 days. And if it is in HO, it is 6 to 8 weeks. If it is above 25 lakhs housing loan, 30 days at RH, sanction it is 45, sanction at HO it is 8 to 9 weeks, and Canara rent it is not applicable. For RH, it is sanctions at circle office it is 45, sanctions at HO it is 8 to 9 weeks, and Canara mortgage also it is not applicable in the case of RH sanctions. Circle office it is 45, 8 to 9 for HO. Canara Jeevan sanction as at circle 30 days. Canara Vehicle 7 days for RH. Circle it is 15 days. HO it is 2 to 3 weeks. Canara Budget 7 days for RH or R branch. And Circle it is 15 days. Sanction at HO it is 2 to 3 days. So you need to be very thorough with this one because what bank has introduced the TAT portal and they are monitoring the TAT on a day-to-day basis. So bank is giving utmost important to the TAT portal. So you need to by heart it very clearly. Now coming to risk tier for retail lending. Retail risk tier for retail lending is yet another important topic with regard to retail lending. Because why? Because this has also been introduced from this year onwards, wide HO Circular 198 by 2024. So risk tier is a new topic or a new guideline that has been put forward by the bank from this year onwards. So you need to give utmost important to this topic from an examination point of view. What is this risk tier? Okay, that I will just tell you. Earlier we have seen that is every retail lending borrower is subjected to a rating of CRG with by which we determine the delegation of powers as well as what the rate of interest. Now, from a risk point of view, bank has also come up with a guideline of risk tier. That is, bank has defined risk tier of near prime and subprime in the case of CRG 3 and 4 respectively. Why? Because I will tell you. See, as you all know, CRG prime, CRG 1, both are excellent borrowers because we rate them excellent. So the probability of them defaulting is very, very less. Correct? Now, coming to CRG 2, the probability is little more less. That is, they have a higher chance of defaulting with our bank. Now, coming to CRG 3 and 4, they are almost high risk customers. CRG 3 is moderate and CRG 4 is high risk customers. That means they are not at all, we cannot say not at all, but they are still an undesirable borrower for us as far as lending is concerned. But still, considering other major factors, we may lend to those parties. But whether we can, what if all our customers that are coming to us are CRG4, whether we can lend to them or no. So bank has given a tire kind of setup for these kind of borrowers. That is, CRG3 and CRG4 are not that much desirable for us. So we have introduced a risk tire system for these two. So CRG3 is named as near prime and CRG4 is named as subprime. In the case of CIC band, wherever CRG rating is not applicable, we have already seen that in the case of borrowers where CRG rating is not applicable, we need to go for what risk tire, correct? This CIC score band. So wherever CRG rating is applicable, the CRG rating 3 is equivalent to near prime. And wherever CRG is not applicable, the risk band, I mean CHC score band, if it is between 730 and 681, they will be treated as near prime. And if it is 300 to 680, we need to treat them as subprime. Okay. That is one aspect. That is, bank has introduced a two-tier setup for the high-risk customers. That is moderate and high-risk customers. Now, what is the another implication? That is, we need to charge them 0.25 percentage wherever the borrower is subprime. This is one question you can expect. What is the additional rate of interest that your bank is charging for subprime borrowers? That is 0.25 percentage. Now, we have a bank has put forward a tire setup for CRG3 and CRG4 customers. What is the use of this one? Whether is it sufficient? No. We need to create a benchmark for that. So that is what we are going to see next. That is, the near prime category of borrowers should be maximum up to or can be maximum up to 10% of the percentage of loans, retail loans sanctioned during the year. Suppose the bank has sanctioned 1 lakh crore under retail loans for this particular year, out of which only how much? 10% of that one. Okay, that is 10,000 crore can be of near prime, that is CRG3. Now, subprime, what is it? Only 5% of what total sanctions can be CRG4. So that is the concept of bringing the risk tier setup. That means we cannot go on lending to CRG4 and CRG3 customers. There should be a threshold limit up to which we should stop lending to CRG3 and CRG4 customers. That is this 10% and 5%. Now, what is the trigger limit? The trigger limit is the bank has put forward already said that CRG3 can be up to 10%. So one fine morning, the bank finds that okay, the CRG3 sanctions have crossed 9%. Then a trigger will be alerted. The trigger will be alerted for what? CRG3 customers, that is near prime, it is set at 9%. And wherever CRG3 is not, CRG rating is not applicable, the trigger is set at 8%. Now coming to CRG4, the trigger is set at 4.5% for CRG applicable. And in the case of CRG where it is not applicable, the trigger is set at 4%. Now, who is going to monitor this one? At a branch level, we need not monitor. At RH level also, we need not monitor. The monitoring will be done by RMV on a quarterly basis. They will keep track of the retail lending sanctions by bank or various RHs and branches or during every quarter, and they will see how much percentage has been lent towards near prime and subprime categories. If the percentage is above that trigger level, that is 9%, they will initiate the remedial actions. That is, they will issue advisory and all. That is, henceforth, we should not go on lending to near prime and subprime categories. So I think so from an examination point of view, you need to by heart this what is near prime CRG the categories, that is CRG3, and subprime it is CRG4. And in the case of CRG not applicable cases, it is linked to the CIC score. So it is 730 to 681 in the case of near prime and 300 to 680 in the case of subprime. And also you need to see the ceiling of maximum ceiling of lending that the bank can do in a financial year for CRG near prime and subprime. It is 10% in the case of CRG near prime and 5% in the case of subprime. And also you need to remember what is the trigger limit beyond which the trigger will be alerted by RM wing. It is 9% for CRG applicable cases for near prime and 8% for CRG not applicable cases, that is CIC score for near prime, and 4.5 in the case of subprime and 4% in the case of CRG not applicable cases. Now, with regard to retail lending, the next important thing is that this one, what are the priority sector schemes or the which all sectors we are lending to so many products, right? That is, we are lending to housing loan, we are lending education loan, we are lending Canara vehicle product, we are lending Canara budget, Canara mortgage, pension loan, everything we are having. But all these products doesn't qualify for the priority sector lending under retail lending. There are only very specific products which are actually qualifying for the priority sector lending under retail lending. So now we are going to see which are all the products that are qualifying for the priority sector lending under retail lending. You know the priority, will be a separate class on priority sector lending, but for the sake of clarity, I will just touch upon the priority sector scheme. That is, banks are required to achieve 40% of adjusted net bank credit or ANBC as on every financial quarter ending or financial year end. That is, if a bank has lent 100 rupees, 40% of that should be lent towards priority sector. So that is the concept of priority sector lending. That means we cannot lend the entire 100 rupees to non-thrust areas or non-priority sector areas. We need to lend it to priority sector areas also. That is 40%. Okay. Now, RBI has defined which all areas or which all products are also qualifying for priority sector lending, which broadly, if we say MSME is there, agri is there, renewable energy is there, social infrastructure is there, so many areas, export credit is there, so many are there, but housing is there, education loan is there. So with regard to retail lending, which are the areas which are qualifying for priority sector lending? That we are not going to see. So in the case of housing loan, loans to individuals up to 35 lakhs in metropolitan centers, that is with a population of 10 lakhs and above. So here one question is like, what is the population of metropolitan cities? It is 10 lakh and above. So that in a metropolitan city, if we are lending for a housing loan, then if the dwelling, that house value is up to 35 lakhs, the house value is up to 45 lakhs and the loan value is up to 35 lakhs, then that particular loan may or will be qualified for priority sector lending under housing loan. Suppose in Bangalore is a metro city. Okay, Bangalore, we are lending, say 50 lakhs against an estimated value of 100 lakhs, or say a flat, we are lending for a flat which cost 100 lakhs and we are lending, say 50 lakhs. Will that be qualified for priority sector lending? No. In metro city, if the lending, if it has to be qualified under priority sector lending, the value of the property should be 45 lakhs only. It should be below 45 lakhs and the loan amount should be 35 lakhs. So that means suppose in Bangalore, if we are giving a loan for construction of housing with the, say, estimate value of 45 lakhs and the loan amount is 35 lakhs, then it will qualify for priority sector lending. That is for metropolitan. Now, what is the criteria for other than metropolitan? it is like the value of the property should be 30 lakhs and the value loan amount should not exceed 25 lakhs. Then in that case, the loan will be eligible for uh, classification under priority sector. So that is the concept of priority sector lending under housing loan. Now coming to repairs and renovation. See, we can give repairs and renovation loan up to 15 lakhs now, as per our guidelines. Now, whether all the repairs and renovation loans that we lent qualify for this one, priority sector? No. There also, RBI has put a limit. That is, in metropolitan city, if the loan amount is up to 10 lakh for repairs, then it will qualify for priority sector lending, provided the value of the property should not, or the value of the dwelling unit, that the house should not exceed how much? 45 lakhs. There also, that overall cost of the dwelling unit comes into picture. It is not that you are lending 10 lakh rupees for a flat in Bangalore for repairs, but the flat cost is, if it is 100 lakhs, it will not qualify because the dwelling unit cost should be within 45 lakhs. Then only the loan amount up to 10 lakhs for repairs will eligible for metropolitan, will eligible for priority sector lending. Now, what about other center? Other center, the priority sector lending classification for this one repairs and renovation is 6 lakhs. There also the value of the property will come into picture. It should be less than 30 lakhs. So in other centers other than metro area, if the house cost is 30 lakhs and the value of the say this one sorry, house cost is up to 30 lakhs and the loan amount that you are giving for repairs and renovation is up to 6 lakhs, then that 6 lakhs will be eligible for what? Priority sector lending. Now coming to educational purpose. Educational purpose, it is very easy to remember. All education loans up to 20 lakhs, including abroad studies, everything will, and vocational courses will be eligible for priority sector lending if the loan amount is up to 20 lakhs. Okay. That is the concept of priority sector lending with regard to retail lending. Now comes another important topic, that is long-term review of long-term retail loans. You all know retail loans review concept, correct? That is all loans above 5 lakhs should be reviewed by the next higher authority. That is the normal procedure. Now, suppose if the loan amount is more than a particular amount, then that is subjected to one more review. That is called a review of long-term retail loans. So, which are all the loans are eligible or are subjected to long-term review of retail loans? That we will see next. This particular topic is very important because there has been a change in the guideline with regard to long-term retail loans very recently. So there is every possibility that you can expect a question from this topic. So which are all the long-term retail loans which are subjected to review other than the regular review? Okay. All retail mortgage-based loans with the present exposure above 100 lakhs and education loans backed by mortgage with the present exposure above 50 lakhs shall be within the scope of the review of long-term retail loans. So it is like a bank will take a particular reference date, and on that particular date, we will see which are all the retail mortgage-based loans with the exposure above 100 lakhs. All that loans needs to be subjected to review of long-term review loans, retail loans. Okay, that means if a branch is having a Canara mortgage loan of exposure above or outstanding above 100 lakhs, that needs to be reviewed again. It is a periodical exercise, and it is for mortgage-based retail loans other than education loan. In the case of education loan, the guideline is little bit different. That is, if it is backed by mortgage, it is what the limit is above 50 lakhs. So why we are telling about educational loans backed by mortgage? Does that mean there are educational loans which are not backed by mortgage loans? Yes, there are education loans which are not backed by mortgage. Which are they? It is called Vidya Turant loans. Because Vidya Turant loans also we have now. That also that is exempted because only education loans which are backed by mortgage loan with the present exposure above 50 lakhs only we need to uh, uh, check, or we need to this one subjected to review of long-term retail loans. Now, coming to what is the periodicity of this review of retail loans? That is, first thing is each eligible retail loan shall be reviewed within 2 years from the date of first disbursement for the first time. So, all the regular and standard retail loans that we have discussed earlier with the limit of 100 lakhs and 50 lakhs that we need to review within 2 years from the date of first disbursement for the first time. So that is the periodicity within which we need to have a review. Okay. So the question that may be asked is what is the periodicity within which the long-term retail loans is subjected to review for the first time. That is 2 years from the date of first disbursement. Now, there is an exception to this one, which is that we already said it is above 100 lakhs for retail mortgage based and above 50 lakhs for education loan backed by mortgage. Suppose if it is sanctioned by circle head up to 5 crore, it need not be applicable. So the exception here is all retail loans up to 5 crore and above, up to 5 crore sanctioned by circle head need not be subject to review of retail loan, long-term retail loans. So this is the concept of review of long-term retail loans. Now comes another important topic, which is also introduced very recently, that is with in this year, that is switch over from floating to fixed rate regime. Okay. Bank has come up with a guideline of this that borrowers can switch to fixed rate from floating rate. Okay, so bank has come up with a guidelines also for that one. During the reset of interest rates linked to respective loan accounts, option shall be provided to the borrowers to switch over from floating to fixed or vice versa. Vice versa is also applicable. That is, if it is sanctioned under fixed rate, they can switch over to floating during the residual tenor of the loan account, subject to the conditions. Okay, what are the conditions? For housing loan, all variants, the condition is that the number of times a borrower shall be allowed to switch over to respective interest regime shall be restricted to how many times? 3 times. And reset period shall be minimum 3 years between switchovers. That is in the case of housing loan. Now, coming to all other EMI based retail loans other than housing loan, this particular condition is in such a way that the number of times a borrower shall be allowed will be restricted to 2 times. But reset period will be same in both the cases, that is minimum 3 years between two switchovers. So this is very important because this is also a very recent guideline. So we need to by heart this one. That is, whenever the switchover is permitted, the maximum number of times that we can permit the borrower for switchover to floating or fixed is maximum 3 times in the case of housing loan, and in the case of other than retail with the EMI based retail loans, it is maximum 2 times. The reset period will be same for both the cases, that is minimum 3 years between two switchovers. Now, this is yet another very, very important topic. This is with regard to the regulatory aspect put forward by RBI. This is also very important because it has come into effect from October 1st, 2024. So, there also we need to by heart this one. what is key fact statement or what is KFS. So KFS is a very newly introduced concept by RBI that every bank, all the banks have to give key fact statement to the borrower while sanctioning MSME or retail loans. So since it is a retail lending session, we are most concerned about the retail lending part. So what are the guidelines with regard to key fact statement for retail borrowers? That I will just tell you. So the key fact statement, uh, it is applicable from which date? 1st October 2024. That means all the retail loan customers that is sanctioned on or after 1st October 2024, including fresh loans to existing customers, should be provided with key fact statement KFS to help them take an informed view before executing the loan contract. So what does the key fact statement contain? The key fact statement will contain all the details about his loan, that is fees, what are the charges, those things, what are the reset period, everything is included in the key fact statement. So before executing the loan document, we need to hand over this key fact statement to the customer. Then only he can take a informed decision about whether to go for execution or not. What is the importance of executing the document here? Because once the borrower has executed the document, it means that he is deemed to have availed the facility. Okay, because from that point onwards, he is liable to pay processing charges and all. So before executing the loan document, we need to give them a key fact statement, and which is applicable from all the loans, retail loans that is sanctioned on or after 1st October 2024. Now, what is the validity of this key fact statement? Okay, that is, we cannot give a key fact statement with a date prior to this one. That is 1 month back. We give a key fact statement and we are asking the customer to sign the document. No, there is a validity for the key fact statement. That is, the key fact statement should be valid for at least 3 working days for loans having tenor of 7 days or more, and a validity period for 1 working day for loans having tenor of less than 7 days. That means whatever information that we have mentioned in the key fact statement should be very recent. That is, it should be within 3 working days. So, the tenor or the validity period will be 3 working days for loans having tenor of 7 days or more, and the validity period will be 1 working day for loans having tenor of less than 7 days. So any fees charges which are not mentioned in the key fact statement cannot be charged by the bank to the borrower at any stage during the term of the loan without explicit consent of the borrower. So that is the importance of key facts statement. Now, coming to another change that has happened very recently, that is there has been a small change in the nomenclature in respect to VSL products. That is, the earlier the 742 products was named as loans against valuable securities. That is VSL. It has been changed to retail loans against other approved securities. This has been very recent change. That's why I have included in this one. And the 743 product, that is retail VSL against our own deposit, the name has been changed to retail loan against our own deposit. The change here is we have appended the retail loans wordings in front of both this one. So retail loans against other approved securities, it is the new name given for 742 product, which was earlier named as loans against valuable securities VSL, and the new name for retail 743 product, that is retail loan VSL against our own deposit, it is retail loan against our own deposits. That you just need to by heart. Now comes another thing, which are the schemes discontinued this year. That is, schemes which have been retail loan lending schemes which have been discontinued this year. It is Canara Home Loan Super Game. That is CASA. That and another product is teachers loan. So earlier in one of the exams in 2021 or 22, there was a question asked with regard to one discontinued scheme. So that's why I have included this one. So they may ask like which among the following products have been discontinued from this year onwards or from so and so date. So it is Canara Home Loan Super Gain, which is not no more there, and Teachers Loan, which is also discontinued. Now, coming to yet another important change that has happened very recently with regard to retail lending. We all know that is bank has come up with uh, a tie-up arrangement with the Car Deco. That is, Car Deco is an app wherein we can get the details of all the cars, newly available cars in the market. So that Car Deco is a startup company. They have the details of all the. Suppose if you log into that app and you search for particular car, you get the on-road price of that car in a particular city. You will get all the variants of that car, every detail that. So what is that app essentially doing? They are actually getting the data of customers which are probable, or they are probably they are to take a vehicle in near future. So we have tied up with Cardeco. So Cardeco, their name is brand name is Cardeco, but their uh, legal entity name is Girnar Software Private Limited, that is GSPL. So we have got a tie up with the Cardeco. The Cardeco will pass on the leads to Canara Bank for Canara four-wheeler loans, and if that particular lead is converted to business, they are entitled for uh, this a monetary benefit, that is commission. That how much amount? That is 1.3 percentage of disbursed loan amount with a maximum of 1 lakh for each disbursed proposal. So that is, and yet another important point with regard to this one is it is applicable to metro and urban centers of our bank only. That is, semi-urban loans sanctioned in semi-urban areas will not be applicable for this particular incentive scheme. So why this particular scheme is very important? Because one is this is the first time that bank is coming up with such a scheme. So that has been introduced very recently only. So that's why this particular scheme is very important. Now coming to the who is the authority to pay this one payment to Cardeco? It is Circle Head. Okay. So what you need to by heart here is the tie-up corporate vehicle DSA. You already know that we have a tie-up scheme with dealer commission payment. Correct. So apart from dealer commission, this is another tie-up that we have come across. That is, we have tied up with the Cardeco. Their business name or the brand name is Cardeco, but their legal entity, the company name is Girnar Software Private Limited, to uh, pass on the leads of for Canara vehicle. What is the incentive that they are going to get for 1.3 percentage of disbursed loan amount with a maximum of 1 lakh for each disbursed proposal, and it is applicable only in metro and urban centers, and also the payment, the delegated authority to give payment is Circle Head. Now we'll just come to this retail lending schemes, newly launched retail lending schemes. Before that, I will just, with your all permission, I will just take a small break of 2 minutes. Sir, is it fine, sir?
Yes, sir. No problem. Take a break.
Yeah, 2 minutes I will. Hi all. So we are good to go. Uh, Now coming to the latest schemes in retail lending that the bank has introduced this year. Okay, we will just start with that one. The first one is the very famous PM Surya Ghar Yojana, which is our product called CRTS, that is Canara Rooftop Solar. So Canara Rooftop Solar, there are two products under this, that is for up to 3 kilowatt powers and uh, above 3 to up to 10 kilowatt powers. So Canara Rooftop Solar is a kind of government sponsored scheme which is under the scheme of PM Surya Ghar Yojana, that is PMSGY. So bank has come up with our own product for this financing this particular scheme, that is Canara Rooftop Solar, which has got two components, that is with the installed capacity up to 3 kilowatt and with the installed capacity up to 10 kilowatts, that is above 3 kilowatts and up to above 3 kilowatts and up to 10 kilowatts. Now we will first see the Canara Rooftop Solar up to 3 kilowatts. Now 3 kilowatts, the major points that I will just go through, that the loan quantum has is maximum up to 2 lakhs, which is including of subsidy, and maximum up to 6 lakhs in the case of 3 kilowatt to 10 kilowatts. So I'm just checking, I mean, telling upon the basic features of this product. Okay, we are not going very deep because from an examination point of view, what are the expected questions with regard to scheme, that I am just telling. So in the case of up to 3 kilowatt scheme, the maximum loan amount, including subsidy, that we can lend is 2 lakhs. And if it is 3 kilowatt to 10 kilowatts, the maximum loan is 6 lakhs. Now coming to what is the maximum subsidy that is available? That is 30,000 per kilowatt shall be provided for up to 3 kilowatt rooftop system, and additional subsidy of 18,000 per kilowatt shall be provided for above 2 kilowatts up to 3 kilowatts. So that essentially means if a borrower is installing an capacity of rooftop solar of say 2 kilowatts, he will get a subsidy of 30,000 into 30,000, that is 60,000 for 2 kilowatts, and additional subsidy of say 18,000 for per kilowatt if it is up to 3 kilowatts. Now, for systems above 3 kilowatts, the subsidy is capped uniformly at 78,000. Okay, so that is the concept with regard to subsidy. Now the margin is uniform across this one, that is 10%. And in the case of up to 3 kilowatts, there is no minimum annual income and NTH criteria. This is very, very important. But in the case of 3 to 6 kilowatt, there is criteria for annual income and NTH that we will see in the next slide. So up to 3 kilowatt, there is no minimum annual income and NTH criteria. Now, what is the minimum entry age and maximum entry age in the case of up to 3 kilowatt? This is very recent change. That is the change has happened with regard to 689 by 2024. So you need to by heart it, because when the scheme was first launched, this was not the criteria. They have subsequently changed it. So the minimum entry age is 18 years and the maximum entry age is 75 years. Now coming to wherever the age of the applicant is beyond 65 years, the loans shall be sanctioned along with the obligation of legal hair, who is aged below 60 years. So we told the maximum entry age is up to 70 years, correct? But if we are lending to a borrower with the entry age above 65 years, then his legal hair with the who is having a age below 60 years should join as a co-obligant to the loan. That is the first condition. Now, what is the maximum loan repayment tenor that can be given. That is up to 10 years. Okay. But while giving the maximum loan tenor, we need to take into consideration his borrower age, because the borrower age should not exceed 75 years by the end of the repayment tenor. That is one aspect. Now, who is the sanctioning authority? Earlier, when the loan was scheme was first introduced, the sanctioning authority was DMRO. Now, the sanctioning authority has subsequently changed. Very recently, it has been changed to branch head. So, branch can sanction the loan under Canara rooftop solar for up to 3 kilowatt. So, if his CIC score is 680 and above, and in the case of the borrower is not having credit history, it will be like -1 to 99. So that is the sanctioning authority part. Now, coming to our employees and ex-employees are also eligible for this particular scheme, but the sanctioning authority is not branch head. In that case, it is RO head. Okay. This is also very important from an exam point of view. Now, the next one is a very recent change that has happened in the Canara rooftop solar scheme. That is, what is the mode of disbursement? That is how the disbursement is going to happen. That is, we can give an upfront disbursement of 75%, 70% of the project cost, including margin money of 10%. And the remaining 30% will be disbursed within 30 days of satisfactory installation and post-installation verification by the bank. You all know this solar installation is a lengthy procedure, correct? Because it is not like a product or a vehicle which can be easily installed at our homes. It requires time. So the disbursement will also be in such a manner that it is a stage-wise disbursement. So the disbursement stage is like initially we can lend up to 70% of project cost, including the margin money of 10%, and what the remaining 30 can be disbursed within 30 days of successful installation, and it has to be verified by the bank that it is working perfectly fine. So this also we need to by heart, because this mode of disbursement has been later on introduced by the bank. That is very recently too. I think it is 1 month back only we have modified it. So it is also very important from an exam point of view. So this is about Canara rooftop solar up to 3 kilowatt. I'll just go through the points once again. The maximum loan amount is up to 2 lakhs. And if it is up to for 3 kilowatt, and it is up to maximum 6 lakhs if it is above 3 to 10 kilowatts. Now the subsidy is 30,000 per kilowatt up to 2 kilowatt rooftop systems, and additional subsidy of 18,000 per kilowatt. And in the case of above 3 kilowatt system, the subsidy is capped at maximum subsidy available is only 78,000. The margin is 10%, and there is no minimum annual income in the NTH criteria for up to 3 kilowatt scheme. I told it is only for up to 3 kilowatt. For above 3 kilowatt and up to 10 kilowatt, there is margin and NTH requirement that we will see in the next slide. Then the minimum entry age is 18 and the maximum entry age is 75 years. And if we are lending to an applicant who is aged beyond 65 years, then co-obligation of a legal heir who is aged less than 60 years need to be obtained. Repayment tenor should be maximum 10 years. However, he should repay it before attaining an age of 75 years. Now, who is the sanctioning authority? It is branch head for other than employees and ex-employees, and the score will be 680 and above, and -1 to 99 in the case of non applicability of credit history. And in the case of our employees and ex-employees, the sanctioning authority is RO head. And in the case of say disbursement, we already saw upfront disbursement. That first stage in disbursement can be done of 70% of project cost, including margin money of 10%, and remaining 30% will be disbursed within 30 days. of successful installation. Now coming to this above 3 kilowatt to 10 kilowatt. Now about 3 kilowatt to 10 kilowatt, the guidelines, what does it say? I am just giving only those points or those features which are different from 3 kilowatt. All the other guidelines are same as that of 3 kilowatts. Okay. The maximum loan amount will be 6 lakhs. Earlier, in 2 kilowatt, we have seen it is 2 lakhs. So here it is 6 lakhs. I already said there is no minimum annual income and NTH in the case of up to 3 kilowatts. But above 3 kilowatts and 10 kilowatts, there is minimum annual income requirement. That is, it should be 3 lakh. And the NTH will be 25% subject to a minimum amount of 10,000, whichever is higher. After, so this NTH percentage, you can just by heart like this one. This is same as that of what is required for housing loan. So housing loan also, the minimum NTH is 25% or 10,000, whichever is higher. So in the case of Canara rooftop solar about 3 kilowatts and 10 kilowatts, the NTH is same as that of housing loan. That is 25% of gross income or 10,000, whichever is higher. Branches are what the subsidy support, that is we already saw it is flat 78,000. Okay, now branches are not empowered to reject any proposals originated through Janasamarth portal. That is, we already know that the Canara rooftop solar proposal has to be routed through Janasamarth portal. So the sanctioning authority here is branch. So the sanctioning authority themselves cannot reject the proposals through which are routed through Gensamarth. So who is the empowered authority to reject Canara rooftop solar scheme? That is next higher authority. Now coming to another retail lending scheme that has been introduced by the bank this year is that Swarna monthly interest. So this also is very important because this is also a new scheme which has been introduced by the bank this year. So you have to familiarize with this particular scheme, that is Canara retail lending scheme, retail gold loan scheme, Swarna monthly interest. We all know this interest, our traditional gold loan schemes are not demanded monthly. The interest is not demanded monthly. So there is a new product which we've replicated with those having those of NBFCs, that is Muthoot and Manappuram. Those NBFCs are having this kind of gold loan. No? So in order to compete with them, we have introduced a similar product called Swarna monthly interest. What are the features of that one? That I am just telling. The minimum loan amount under this monthly interest Swarna monthly interest scheme is 5,000, and the maximum loan is 35 lakhs, which we all know because almost all the gold loan products, the scheme, cap is 35 lakhs. Okay, be it agriculture, be it MSME. Sorry, MSME is now not there, or any other scheme. The maximum loan amount is capped at say 35 lakhs. The minimum loan amount is 5,000, and the maximum loan amount is 35 lakh. Now, the rate of advance. What is the maximum lendable value that we can give? That is 75% of appraised value of gold. That is, the borrower is required to maintain a 25% margin, or we can say the LTV is 75%. Okay. Now, how is the interest is being charged? Interest is charged to be serviced as and when due at monthly intervals. Unlike other MSME, gold loan products, wherein the customer is required to pay the interest only at the end of, say, 1 year. It is not like that. It is month, as the name suggests, it is Swarna monthly interest product. So it is like we need to charge the interest on monthly intervals, and they need to repay the interest on monthly intervals. Principal is to be repaid within 12 months from the date of sanction, or as bullet payment on maturity. So only the interest payment is demanded as and when due. The principal amount can be repaid within 12 months within their convenience. As we all already said, loan value is like 75 percentage. Should not go beyond 75 percentage at any point of time. So that is about the new retail lending gold loan scheme, that is Swarna monthly interest. Now comes the another important product that the bank has launched this year. That is, you all know that Canara Heal Healthcare Emergency STP scheme under the retail lending scheme. Uh, this is also very important from an examination point of view because bank gives utmost important to those products and modifications which have been uh, launched in the last 1 year. So this is one such scheme, that is Canara Heal. Now, so what are the characteristics or this one features of this particular product that we will see now? So this particular scheme is aimed at funding the shortfall of hospital expenditure while settling the claims of self and dependents through third-party providers. That is for both existing and new customers by way of straight-through processing healthcare loan. So it is like I am having a house insurance scheme, that is health insurance I have taken, which is of 5 lakhs. Suppose in case of an emergency, I have exhausted the limit of 5 lakhs. So my hospital bill is say 6 lakhs. So I have a shortfall of 1 lakh. That 1 lakh, the bank can fund to the customer through this particular scheme that is called Canara Heal. So as the name suggests, or as the feature suggests, the topmost requirement is that customer should have a valid health insurance policy to be eligible for Canara Heal. Now, the next important feature of this one is the age of the borrower should not exceed 21 to, it should be between 21 to 55 years. In the case, it is, as we already said, it is applicable in the case of existing and new customers. But existing, we can fund for salaried and non-salaried classes. But in the case of new customers, only salaried class customers are eligible. Now, with regard to CIC score, the minimum score should be 700 and above. That is one requirement of customer to comply with to be eligible for Canara Heal. The next point is the customer should not have slipped to SMA or NPA category in last 12 months if already availed any credit facilities. That is, we need, even if the credit score is 700 and above, we need to check the credit history in CIC and ascertain that none of the credit facilities has not slipped to NPA or SMA in the last 12 months. That is another requirement that a customer has to comply with. Okay. Now coming to the minimum loan quantum, that is, it is 25,000 and the maximum loan quantum is 5 lakhs. And the loan quantum for salaried customers is 6 times of the average last 3 months salary credited in the salary account. And in the NTH requirement is 10,000 per month after meeting installments for all the existing loans and proposed loans. So that is this Canara Heal. We will continue in the next slide also. I am just going through the features once again. That is, they should have a valid healthcare policy. He should be aged between 21 to 55. Existing customers are eligible and new customers are eligible. In the case of existing customers, we can fund salaried and non-salaried customers. In the case of new customers, only salaried class customers are eligible. And the customer should have a minimum CHC score of 700 and above. Not only that, even if his score is above 700, the customer account should not have slipped to NPA or SMA in the last 12 months. That is not with our bank alone. It is across all the banks. That is, we need to go through his CBIL or CIC report to ascertain this. And the minimum loan quantum under Canara Heal is 25,000 and the maximum loan amount is 5 lakhs. For salaried customer, the loan quantum is 6 times the average last 3 months salary credited in the salary account and minimum NTH is 10,000 per month. Please note there is no percentage NTH required for this one. That is only amount wise is there because we already saw in the case of Canara rooftop solar up to 3 kilowatt to 10 kilowatt, the NTH is 10,000 or 25% of 25% gross income, whichever is higher. But in the case of Canara Hill, only amount wise requirement is there, not percentage wise. Okay. Now, coming to Canara Hill remaining part, that is no minimum credit turnover in the salary account is required. That is this much of credit is required like that. No. Hello. Oh, okay, okay, okay. I will just. So I think somebody has raised a query regarding margin with regard to 3 kilowatt to 10 kilowatt. That I already said it is margin is 10% across all the categories. Okay, it is for 3 kilowatt to 10 kilowatt also the margin is same. Only the difference comes in maximum loan amount that is 6 lakhs and the minimum annual income requirement is there that is 3 lakhs and the NTH is there that is 25% to 10,000 and subsidy support is 78,000. So these are the points in which the 3 kilowatt to 10 kilowatt product differs from 3 kilowatt. Now coming, I think we can go towards Canara Heal. Okay. So we told in the case of salaried account, salaried customers, the loan quantum is 6 times the average of last 3 months salary credited in the salary account. So there is one more condition with regard to salary credit. That is, in the last 6 months, at least 4 times salary, monthly salary shall be credited. Okay. To mandatory salary credit in savings bank during last preceding 2 months from the date of loan application. That means in order to fix the loan quantum, we have to go for this 6 times of the average last 3 months salary. Apart from that, there is another condition that at least 4 months monthly salary should have been credited. Okay. For existing customers having salary account with the other bank, the condition is that during the last 6 months, the customer shall maintain minimum average SB balance of 50,000 in our bank and having a minimum credit turnover of 1 lakh and debit turnover of 75,000. So that is in the case of customers who maintain, we already told in the case of salaried class, those who are having salary account with other bank is also eligible for Canara Hill. But there is a condition that for the last 6 months, their monthly minimum average SB balance with our bank should be 50,000. And the total turnover, that is the total credit in the account should be 1 lakh and the debit should be 75,000. Then only the customers who maintain salary account with other bank is eligible. For new customers, we already said only salaried class is eligible. For them, the last 3 months salary slip shall be validated and last 1 year bank statement shall be uploaded. Now the processing charges is 100% waived till 31/3/2025. So these are the basic products, I mean basic features of Canara Heal product that is launched by the bank this year. So it is about the basic things. Now I will just see if you have any questions, you can put it in the chat box so that I can reply to that before we go on to the next topic. Sir, is it fine?
Yeah, I have enabled chat box.
Okay, okay. Srinath Tampan has asked with regard to NTH clarification for Canara rooftop up to 3 kilowatt. So I told there is no NTH and annual income criteria for Canara rooftop solar up to 3 kilowatts. Now, sanctioning authority for Canara Heel and CRTS, this one, Canara's, this one, rooftop. See, Canara Heel it is a state through STP, this one, processing. So, as such, the sanctioning authority doesn't come into picture. In the case of CRTS for Canara rooftop solar, the sanctioning authority is branch head, and in the case of employees and ex-employees, the Canara sanctioning authority is RO head. And with regard to, yes, sorry, I'm extremely sorry. The margin percentage for 3 kilowatt to 6 kilowatt is 20% against 10%. That is up to 3 kilowatt, it is 10%. Sorry for the mistake. It is 20% for 3 to 6 kilowatt. Concept of LTV ratio in HL. Okay, I'll just share my slide and I will tell you. LTV ratio. See, LTV ratio, it is essentially the maximum loan that you can lend against the property. Okay, that is the LTV ratio. That is the meaning of LTV. That is loan to value ratio. Suppose you have, it is like this. A customer comes with a estimated cost of 30 lakhs. Okay, you have the minimum margin that you are required, this one, minimum margin that you are required to keep is 10%. That is, you can lend maximum of 90%. That is up to 27 lakhs you can lend. Okay, so for every product, bank is required to keep risk weight based on the loan to value ratio. Suppose if we lend more loan against a property, the risk weight is more. That means for loans up to 30 lakhs, if the LTV is less than or equal to 80%, that is, we are lending only 80% of the property value, then we are required to keep the risk weight of 35%. Suppose if the LTV goes up to 90%, from 80 to 90%, the risk weight is 50%. That is the concept. Now coming to above 30 lakhs and 75 lakhs. Above 30 lakhs to up to 75 lakhs, the LTV ratio is 35% uniform. And in the case of above 75 lakhs, the risk weight is 50%. That is, you are required to keep a margin of 25%. That is, the loan to value can go up to 75 in the case of up to 75 lakhs. And in the case of 30 lakhs to 75 lakhs, you can go, the LTV ratio can go up to 80 with a risk weight of 35%. I think it is clear now. Sir, whether sacrifice and cooling period applicable across all the sectors, that is agri and MSME. Yes, in the case of if you are lending for individuals, this sacrifice is applicable. The cooling period and sacrifice is applicable in the case of consumer segment, it is very well applicable. For both CRTS up to 3 kilowatts and above 3 kilowatts, sanctioning authority is branched only in ex-employee cases, both up to 10. Okay, yes, the sanctioning authority is same for both the 3 kilowatts and above 3 to 6 kilowatts. It is branched if the CIC score is above 683. A branch can sanction, and in the case of ex-employees and employees, Arrowhead is the sanctioning authority, irrespective of 3 kilowatt or above 3 kilowatt. So this is the concept with regard to risk weight. Cooling period is counted from reported data for the date of settlement. Actually, cooling period is counted from the date of settlement and not the reported date. Cooling period is always from the date of settlement, because date of reporting is the reporting done by the bank to the CIC. So that doesn't mean that the customer has settled that loan on that particular date. So in the case of for calculating the cooling period, you need to take into account the date of settlement or date of that return off. That is the day from which you have to calculate the cooling period. Yeah, PPT will be shared by Anandakrishnan sir. I have already shared. With respect to PSL in renovation request. Okay. See, repairs and renovation, I already told that our bank has got a scheme for repairs and renovation up to 15 lakhs. But all the 15 lakhs loan that we give for repairs and renovation doesn't qualify for priority sector lending. That means in the case of metropolitan center, if we give 10 lakh loan for repairs and renovation for a household value which is valued at 45 lakhs, it is eligible to be classified under priority sector lending. That means, I will tell you with an example. I already told, suppose in a bank loan, a house or a flat which is valued at say 1 crore rupees, we have lent say 5 lakhs for repairs and renovation or 10 lakhs for repairs and renovation. It doesn't qualify for this one, priority sector, because the household value should be within 45 lakhs. Then only the 10 lakhs loan that we give for repairs and renovation qualify for priority sector lending in metropolitan center. And in the case of other than metropolitan center, the value of house should not be beyond 30 lakhs and the loan amount should not be beyond 6 lakhs. I think it is clear, right? Any other questions? Canara Heal NTH, it is 10,000 as I already said. It is the 10,000. For repairs and renovation, what is the meaning of component 1 and component 2? See, component 1 and component 2, it is like there are two components in housing loan scheme. That is, you can go for repairs and renovation up to 15 lakhs with a maximum margin of 25%. And there is one more component for repairs and that is providing additional amenities, that is furnishing and all that. Additional amenities, that is 15 percentage or maximum of 50 lakhs. That is component two. So that is the repairs and renovation component one and component two.
Sir, excuse me.
Yeah,
Sir, Canara Hill, is there any other
yeah.
circular after 280?
Any other circular?
Yeah, subsequent to 280.
Yes, 280 subsequent, there is a change, sir. I will share that one.
Okay.
Disbursement in Canara rooftop solar. Uh, yeah, I already told disbursement is up to 70 percentage of uh, project cost has to be initially disbursed, and 30 percentage will be should be released only after completion of installation and verification by the bank officials. For Metro 45 lakhs project, HL 35 lakhs and HL to 40 lakhs. In both cases, up to 35 lakhs will be considered for priority. No, up to 35 lakhs, it is not like that. It is the loan should be 35 lakhs. It is not like up to 35 lakhs is considered. Canara rooftop solar disbursement percentage is not 80-20, it is 70-30. In case of EL, if parent is having NPA in credit card, they will consider for co-obligants. See, in the case of education loan, the concept of co-obligant doesn't come into picture because a student along with the natural guardian has to be party to the loan as applicant and joint applicant. The co-obligant is just like a guarantor, which comes into picture only if it is a management quota. One second. No. Insurance and credit guarantee coverage. Insurance, it is mandatory to be obtained in the case of CRTS. That is, the insurance amount should be borne by the borrower themselves. And the credit guarantee coverage, there is no concept of credit guarantee coverage in the case of CRTS because it is purely a retail lending, not an MSME product. Only in the case of MSME product, this credit guarantee coverage comes into picture. Okay, sir. Sir, I think I have just disconnected from that, Sunada. Or am I audible? But audible. Okay, okay, okay. Yeah, yeah. Yeah, one more product I will continue and then right. So we will continue the product. See, we will go to the main products now. That is housing loan. We will start tomorrow because it is a little bit bigger topic. We will just go through some small products and we will wind up the class for tomorrow because for today, because tomorrow we will elaborate on the main schemes like housing loan, vehicle loan, Canara rent, Canara mortgage and all. So now coming to home loan plus. The home loan plus, why I have to specifically, because there has been a change in the Canara home loan plus guideline this year that uh, maximum tenor it has been increased this year. So that's why I have taken this particular product right now. So what is Canara Home Loan Plus? That we already know that it is given as a top-up loan to our existing housing loan customers. So what are the eligibility and the other things? This one. Okay. So individuals aged between 18 to 75 years who are already availed housing loans with a satisfactory repayment track record is eligible, irrespective of the period run with our bank, is eligible for Canara Home Loan Plus. So the age is 18 to 70. And earlier, there was a guideline that Canara Home Loan Plus can be availed after so and so years the housing loan has been taken. But now it is not there. Irrespective of the period of run with our bank, they are eligible for Canara Home Loan Plus. Now, coming to the loan quantum, in the case of salaried class, it is 24 months gross salary subject to a maximum of 50 lakhs. In the case of non-salaried class, it is 2 times of 3 years last 3 years average gross income subject to a maximum of 50 lakhs. So that is about the loan quantum under home loan plus. Now coming to NTH, it is 25% for salaried class and 30% for non-salaried class. There is no amount specified for NTH in the case of home loan plus. Now, uh, the coming to the frequency of valuation. This is very important point because where house in the case of home loan plus, uh, it is based on the value of the property that we are lending against. Correct. So where housing loan is availed for outright purchase, the value at the time of sanction only shall be reckoned while sanctioning home loan plus. However, there is a condition or there is a relaxation to that. That is, after ensuring a gap of minimum 2 years between two valuation, fresh valuation may be taken for determining the loan quantum. Okay, that means in the case of outright purchase of the property, value which was taken at the time of sanctioning the loan should be reckoned for home loan plus. However, if the minimum time gap is 2 years between two valuation, you can go for a fresh valuation. Okay, that is one concept. And the third one, that is the maximum tenor, is very important because it has been recently changed. That is, earlier it was 180 months. Now it has been increased to 360 months or leftover repayment period, whichever is less. But the sanctioning authority for that is CGM HO CSE. Nonetheless, it is an important point because earlier, the maximum loan tenor was 180 months or the leftover period of the existing housing loan. Now it has been increased to 360 months or the leftover repayment period, but it has to be permitted by CGM, HO, CSE. So that is about home loan plus. Home loan plus, these are the basic things that you need to check. It is very easy. 18 to 75 is the age, and loan quantum is 24 months of gross salary subject to a maximum of 50 lakhs. 2 months or 3 years average gross income subject to a maximum of 50 lakhs. in the case of non-salaried class, and the NTH is 25% for salaried class and 30% for non-salaried class. Now we will come to another topic of Canara mortgage. That is, Canara mortgage is yet another um, fast-moving product of the Canara Bank. So, what are the guidelines of Canara Bank, Canara mortgage? See, home loan plus Canara mortgage, housing loan, uh, Canara vehicle, four-wheeler, two-wheeler. These are all always the hot topics with regard to exam, because every exam, at least one or two questions have been asked from these topics. But products like Canara Jeevan, Canara Cash, Canara Rent rarely has been asked because that they are not that much popular. But these proper products like housing loan, Canara Vehicle, Canara Mortgage, Home Loan Plus, etc., are very important from examination point of view because these are very common products. Okay, now coming to Canara Mortgage, what are the guidelines? Guideline we already said, that is Canara Mortgage is purely based on the value of the property. So how much we can lend, the property should be 50% of the property value we need to take. For determining the loan quantum. Suppose the market value of the property is say 100 lakhs, we can lend up to 50 lakhs against that property, and vacant land cannot be taken as security for Canara mortgage. That is one of the most important points of Canara mortgage. Now, what is the loan quantum in the case of Canara mortgage? There also it is classified into two categories, that is salaried class and non-salaried class. Now coming to salaried class, if they are low and normal CRG rate, great. Okay. The loan quantum is 96,000, sorry, 96 times of last drawn monthly gross salary for salaried class in the case of low and normal CRG grade. And in the case of non-salaried case, low and normal CRG grade, it is 8 times of cash accruals. That is average of last 3 preceding years annual cash accruals. That is the financial year immediately preceding the current financial year during which the customer desires to avail the loan. I will tell you with a practical example. Suppose a salaried class customer comes for Canara mortgage, and his salary is, say, gross salary is 1 lakh. So he is eligible for 96 times of 1 lakh. Okay, that is 96 lakhs he is eligible for if he is risk graded as what? CRG, low or normal. Okay. And in the case of non-salaried class, they are eligible for 8 times their annual gross income. So in order to ascertain their annual gross income, we need to take the average of last 3 years ITR with the balance sheet. So with ITR and balance sheet, you will come to know what is their annual income for the last 3 years. You take the average of that one and multiply it with 8. So you will get the loan quantum for non-salaried class who is low and normal CRG grade. Now, for these two categories, the NTH is 35% or 30%, whichever is higher. Okay. Now coming to salaried class individual, and whether this risk gradation is medium and high, then the loan amount is 84 times instead of 96 times in the case of salaried class, and in the case of non-salaried class, the loan quantum is 7 times instead of 8 times. All other things remain the same. And there is one catch in this, that is in the case of NTH. In the case of NTH, you will be wondering, that is in the case of low and normal grade, the NTH required is 35,000 to 35% and 30,000. But in the case of medium and high risk grade, it is 30% or 25,000. Yes, it is not wrong. It is correct only. Actually, the scheme is devised in such a way. That is, in the case of low and normal gradation customers, the NTH is little bit higher than that of medium and high grade, uh, high CRG rated customers. So, in the case of low and normal, the NTH is 35 percentage, 30,000, and in the case of uh, uh, medium and higher graded customers, it is 30 percentage or 25,000, whichever is higher. Now, another, the last point is Canara mortgage proposal up to 7. This has been asked in one of the exams. That is uh, the maximum loan amount under Canara mortgage falling under HO powers, that is 7.5 crores. It is to be processed by retail asset wing. Okay. For Canara mortgage proposals, more than 7.5 crores shall be processed by respective corporate credit wings. That is either MCCW or LCCW. So that is one question here. So the retail asset wing will process mortgage proposals falling under their powers up to 7.5 crores. Suppose if the Canara mortgage proposal is above 7.5 crores, it will be processed by respective corporate credit wings. So is there any doubts with regard to this particular schemes? Because we will be winding up this right now, and we will take the other schemes, that is housing loan and Canara vehicle loan tomorrow, because that is actually having more guidelines. So we cannot. I wish to take both of them together tomorrow because there will be continuity, and it is from an examination point of view, it is more important. So we have covered all the aspects of Canara housing loan and vehicle loan in these slides, and which will be shared tomorrow. So if you have any other doubts with regard to Canara home loan plus and Canara mortgage, you can just ask now. Or else we can wind up the class for tomorrow. Sorry, for today, and we'll continue the class on housing loan and other related things with regard to housing loan and Canara vehicle tomorrow. Sir, is it fine, sir?
There is only one question from Canara Home Loan.
Yes, sir.
What is the margin for Canara Home Loan Plus?
Canara Home Loan Plus, actually, there is no specific margin. Only thing is you have to comply with the LTV norms. Okay, there is no specific margin as such required. Only thing is the loan to value ratio you have to uh, uh, consider. I will tell you an example. Okay, suppose you have given a loan of 30 lakhs housing loan to a customer. Okay, now he has asked for 10 lakhs of home loan plus. Okay, 30 lakhs is the already given housing loan, and the outstanding is, you just assume that it is 30 lakhs, and now he has come for home loan plus of 10 lakhs. Now for housing loan up to 30 lakhs, the margin is 10 percentage. That is, the LTV can go up to 90 percentage. Okay, now, since he has asked for 10 lakhs of additional home loan plus, now the margin requirement goes beyond 10 percentage, that is 20 percentage. That is the LTV ratio. LTV can be go up to 80 percentage only. So in the case of home loan plus, you need to club the both the loan amount. That is the outstanding of home loan and the proposed home loan plus loan, and based on that you need to stipulate the LTV norms. Got it?
Yeah, there are,
I will just.
sir, for the attention of everyone, I have shared the PPT here itself. Anyway, the PPT will be shared in all other groups also, but for the present who are available in the right now in the session, they can download. I have shared in the chat box. I think there are many questions. I
Yeah,
think
yeah, yeah. I will just go through it, sir. How to what is the margin for home loan plus that I have already shared, told. Loan quantum is based on the valuation of the property. I will just give the practical example. Suppose the housing loan outstanding is 30 and the customer has come for 10 more lakhs of Canara home loan plus, the total exposure will become 40 lakhs. So 40 lakhs, the LTV is 80%. So the value of the property should be at least 50 lakhs. Then only we will comply with the 80 percentage LTV norms. I think you are, Gurjit has asked the question. So you are, I think you are clarified, right?
Can we take agree land for Canara mortgage?
A Canara mortgage agri land cannot be taken. It should be non-agri land and it should be SARFAESI compliant, and vacant land also cannot be taken into consideration for Canara mortgage for calculation. 8 times of income after tax or before tax is considered. Okay. See, gross annual income is always before tax you can take, and the net take for the net income only we need to deduct the income tax thing. The gross annual income is without considering the income tax. How to arrive at the cash accrual? How cash accrual you can arrive from getting the ITR. In the ITR, they will you have to see the computation sheet. In the computation sheet, you need to see the total income that he is getting from his business without considering the income tax. Income tax you need to check only for net income. Gross income you can see what is the total income before income tax is getting.
Okay, I think there are no other questions. Insurance and credit guarantee coverage in our
Yeah, that I already said, sir. Insurance is mandatory in the case of CRTS, and the insurance amount to be borne by customer. Credit guarantee coverage is not applicable in the case of CRTS because credit guarantee scheme is applicable only in the case of MSME proposals. So CRTS is a retail product which is for the captive consumption of retail borrowers. So there is no income generation happening there. So credit guarantee scheme is not applicable.
Okay. Is that okay, sir? Shall we wind up?
Yes, sir, yes, sir. So we will continue with the rest of the schemes tomorrow at the same time.
Yeah. Tomorrow, sharp 7:15, we will start, sir. I request all the participants to join us by 7:15. We will once again have the remaining products will be discussed. Thank you, sir.
Thank you all. Thank you all. Good night. All the best.
Thank you.